name is Pamela Abina. Welcome to the African Business Club. Our goal is to normalize financial literacy, networking, and sharing of ideas and collaboration among Africans. Before we begin this meeting today, we have a few guidelines. There's usually a moderator who mutes everyone's mic while the expert or main presenter speaks. Once the expert is completed speaking, there will be time for questions and answers. There will be also a time for a discussion session. At this time, feel free to unmute yourself to ask questions, share ideas, and give feedback. You can also post questions on the chat window in Zoom. The session will be recorded and will be shared with everyone via email. Please do not forget to place your email in the chat session box. Please also don't forget to subscribe to our YouTube page. We will have a poem by Mercedes before we introduce the speaker. Mercedes, could you please begin?
Marisdi, and I'll share, yeah, Marisdi.
Marisdi,
no problem. I don't currently have access to share anything, so I'm just gonna read it, if that's fine.
That's fine.
So this is a piece dealing with financial woes called The Have-Not. So with a filet mignon wardrobe and a net worth for crumbs on a rat's back, he was financially emaciated, unemancipated, unliberated, incapacitated by debt. In death, he dealt what he was dealt and lost. His fated lot to learn. Go produce rots, wealth, and wisdom do not. That's it. Thank you.
Thank you, Marisdi. I'll now call on Nina to introduce the speaker.
Hello, everyone. Good evening. My name is Sanina Chimanga, and our financial literacy topic today is going to be on building credit post-COVID and uncertainties. We have one expert today that's going to lead the presentation, and her name is Constance Jackson, aka the Credit Diva Expert. Constance is the founder and the CEO of Another Chance Credit. She was born and raised in San Diego. She loves to travel and get her passport wet when time permits. She's a single parent who struggled to manage her credit and finances, and she decided at one point enough is enough of struggling, and she decided to get on her journey. She did not only overcome her issues, but she also conquered them. She's a warrior, and I'm super excited to be on this session and learn everything Constance has to share with us today. So thanks everyone for joining, and without further ado, I'll pass it over to Constance so she can begin her presentation.
Hello, everyone. I'm Constance. Are you guys able to see me?
Not yet.
Yeah, we can.
We can see you.
Awesome. I'm going to go ahead and share my screen. Thank you for inviting me here. I'm excited to be here. Let's see here. I hope I'm sharing the appropriate screen. Is everyone able to see?
Yeah, we can, Constance.
Yes.
Okay. So I'm going to be discussing today how to build credit. All right. So with how to build credit, credit is great to keep. The best way to learn how to save your money on your car, on your mortgage loan, on credit cards, and also to getting the best interest rates. It really takes a lot of financial responsibility in making good choices to be able to achieve that. So if you're very disciplined, you could achieve great credit, okay? the next slide here, getting your financial house in order, okay? So in order to get your financial house in order here, you have to be able to set goals. And then also, aside from setting goals, you have to, oops, just one moment here. Clicking a little too fast there. You have to be able to set good financial habits. Do some of you guys know what setting good financial habits entails of? It's okay to come off mute and answer that question.
Sticking to a budget.
Okay, that's good. Sticking to a budget is one of them, yes. Any others?
Being consistent with your payments.
Yes, that's a great one. Any others?
Being very intentional with your money.
Yes, that's actually a good one. Being intentional. So yes, it's good to have a budget, but you have to know exactly what you're budgeting for. Why are you saving your money? Are you saving to buy a house? Are you saving to buy a car? Do you and your family or loved one want to take a vacation? It's good to know exactly why you're saving your money. So yes, you definitely want to be intentional when you're saving money. I'm not sure why my screen keeps going to the next one. Maybe I should move the mouse. But yes, you definitely want to be intentional. Saving with a purpose. That's one of the bullets on here. You must save with a purpose, and then you also have to be very disciplined when you're saving. So it's a great step to build credit with your credit score. When you're building your credit, it's also to document exactly what you spend every month. So that way you eliminate wasting money, and that way you can keep track of what you spend monthly. Also, I suggest putting money into different accounts. So if you want to go on a family vacation, it's good to have a savings account just for that particular family vacation. I would consider that also a short-term goal. If you and your family or just yourself, you want to go and purchase a home, I would consider that maybe more so of a long-term goal. And then you have a separate account that you have monthly when you're budgeting just for that particular home. And it's great to put money up aside each paycheck you get. So that way you make sure that it is possible to achieve these goals. Okay. Does anyone have any questions?
Hey, Constance, this is Wale. We have a Q&A session after your presentation. So we're going to save all the questions till after you're done with your presentation.
Okay, that's good. All right. All right, so I'll go ahead into the next slide. All right, so 5 habits of building great credit, okay? So with 5 habits of building great credit here, I know you just mentioned ask the audience later, but I do kind of like my presentation to be a little interactive. And so this particular slide, I do want to ask the audience if that's okay. If they just know a few things, you know, prior to me presenting.
You can make it as interactive as you want. Thanks.
Okay. So 5 great things to building credit. Does anyone know in the audience some things that it takes to building great credit?
Yep. Paying off your balance in full at the end of your cycle.
Yes, that's very good. Paying your balance in full is a very good one. So a lot of times, some people, they carry over a balance. So say, for example, if you have a credit card where your limit is $1,000 and you spend $500 of that $1,000 limit, you've already spent half of your limit. So when the credit card bill comes, you're kind of like, ooh, like, I know maybe I could pay that off later. Maybe I'll just pay the minimum. And maybe that credit card lender only requires you to pay $50. So you think it's okay, let me go ahead and just spend the $50 and pay off that credit card, or excuse me, to pay the minimum. No, you want to pay the balance you used in full because you don't want to give away free money. I mean, I don't like giving away free money if I don't have to. You don't want to pay the interest rate that they're charging you on that particular credit card for borrowing the money from them. You want to pay, if you use 500, pay off the 500 when the bill comes, okay? So that's a good one. All right, so next I'm gonna go into the next slide. I know this mouse is very sensitive, guys. So I'll move away from it. So making all of your payments on time. So when you make your payments on time, it's always best to actually if you look at your credit card statement monthly, the credit card statement has a billing due date on there. You don't want to pay on the actual due date. It's actually a good thing, and I don't know if you guys are aware, but did you guys know that you could actually call up your credit card company, or you can actually even check on Credit Karma? I personally like Credit Karma sometimes only for its tools, but you guys can find out exactly when exactly does your credit card statement, when does it report to the actual credit bureaus? Because that's very important, versus the date that it reports versus the date that it's due. Because your payment due date may be due every 7th of the month, but even though your payments are due every 7th of the month, they may report to the credit bureaus every 5th. So you have a 2-day lag in when it's reporting. So if your balance, as we just discussed previously, so say if you had that $1,000 limit and your balance is $500 and you decided to make that $50 payment 2 days after, it's going to show that you have $500 on that credit card that you use, which is you've already used 50% of your limit. So it's very good to know the difference between when your payment is actually due and when the reporting date actually is. Okay? Sorry, I didn't mean to go to the next slide. All right. Also, if you're going to be late, making payments is very, very important. It's 35% of your credit score. That's actually the maximum, 35% of your credit score. So you never want to go past 29 days late. Once you hit day 30 and you're going to have a late payment, it's going to report to the credit bureaus, and you will take a hit in your credit score. Your score will decrease. So if you're going to be late, communicate with the credit bureaus and give them a call and say, hey, I'm going to be late. They might be able to work something out with you, but never try to go 29 days late. Okay. Two, paying down your credit card debt. Okay, so this is actually very important. A lot of times I interact with people who sometimes don't have credit cards and sometimes people who do have credit cards. So for those people who do have credit cards, your utilization is also very important. You also want to keep your utilization very low. You want to keep your utilization below 10%. So with keeping your utilization below 10%, your utilization is calculated by how much debt you carry over compared to the total credit. Excuse me. Your utilization is calculated how much the debt carried over compared to your total credit limit. So basically, once again, if your utilization is at, let's say, 50%, and then your credit limit is $2,000, we'll bump it up. So that means you've already spent $1,000 of your credit limit. That's very high. You want to let them know that you're not living off of your credit cards. You can actually manage your money without having to use half of your credit cards. You're only using your credit cards as leverage. You don't necessarily need to use it to live off of. So that's another thing with your credit cards. So also, with that being said, people usually think that with your utilization, it's good to use no more than 30%. 30% of the limit is not actually the way to go. Most people who have a 785 credit score or higher typically have a utilization rate between 1% and 5%. All right. So establishing a long credit history. So with this one right here, this is also what entails of building great credit. So a lot of times, sometimes, you know, when you're really young, you would be 18, 19 years old, just got out of your parents' home and you want to go get your first car, you have your first job, your summer job. So I recommend becoming an authorized user. Even if you're not young and you're wanting to establish credit, become an authorized user of a loved one or a family member. If you can ask them if you can become an authorized user of their credit card. Make sure though, if you're going to become an authorized user of someone, make sure that that particular person has a great history and a track record of also having excellent credit. You don't want to become an authorized user on someone whose utilization rate is very high, because it will also impact your score. So for example, if I become an authorized user of my grandfather and his utilization rate is 80% every month, that's not going to help me, because that's going to report on my credit every month, 80% credit utilization, and that's not good. You want to become a authorized user of someone who typically spends about 10% or less of their utilization monthly, and they do that monthly. So if they are spending on there, it's not going to impact your score. It'll actually improve your score. And so when you do become an authorized user, that reports on your credit as well. Okay, so then also another great thing is keeping your credit cards open for as long as possible. Your older credit cards is actually what's most important. So if you've had a credit card for about 15 years and you find yourself like, hey, I don't actually really use this card, I'm just gonna call up Macy's, I'm gonna close it out. No, I don't recommend that. If you've had Macy's for 15 years and you find yourself seldomly shopping at Macy's any longer, it's okay that you don't shop at Macy's as much as you used to when you established that card. Still keep that card open. Your credit history is very important because they know that for 15 years, you've been making your payments timely. And other lenders, like for example, if you go to get a mortgage loan or a car loan, they could see that on your credit report that, hey, Ms. Jackson, she's been making on-time payments. She's had Macy's for 15 years and she's been making on-time payments. So I think I can go ahead and give her this car loan, or I can go ahead and give her that mortgage loan. It shows you're trustworthy. So versus if you've only had the card for a year and you made a good payment in March, April, May, June, and July, but then in August you fell off, as well as September, October, November, but then you caught back on in December. So you want to show a great track record. So if you find yourself having any old cards that you don't use, but they have really good history on it, you want to keep that card, okay? Next is going to be always monitoring your credit. So you would be surprised at how many people actually don't know exactly what is on their credit. Most people don't check their credit. So in 9 out of 10 times, there's going to be errors on your credit report. It could be as small as your name. My name is Constance. So if on my credit report, it was spelled Constanc and they omitted the E at the end of my name, that's considered an inaccuracy. So if there's an account on my credit report that has negative information on there, for example, that account, it needs to be validated and it needs to be accurate because the account is associated with a name that's not mine. My name is Constance, but it has an E at the end. You cannot omit the E. That needs to be accurate. Or even, for example, if you had an account on there that say if it did unfortunately go into collections, it's considered a derogatory account. And if the last payment that you made on there was $20, but it states on there the last payment that you made was $22, that's incorrect. Everything needs to be reported accurately, okay? If you don't know exactly what's hurting on your credit report, how do you know what we need to improve on your credit report? So it's very great that you actually check your credit report. Sorry about that. Credit Karma is good for staying in the know and knowing what's on your credit report. Credit Karma actually only shows you TransUnion and it shows you Experian, TransUnion and Equifax. It does not show you Experian. So it's like I said, it's kind of good for saying I know kind of exactly what's on there. Not all lenders report to the same credit bureaus. So for example, if I have a cable bill with Spectrum, Spectrum may report to TransUnion, but they don't report to Experian. So it's always good to know, like sometimes you look at if you do actually look at your credit report and you're looking at it, hey, well, why is this showing on TransUnion, but this is not showing on Experian? So not all of them report to the same bureaus. So it's very good to look at your credit report, know what's on there, review it. And then also, it's very good to invest in a 3 credit bureau monitoring system. What a 3 credit bureau monitoring system is like my Fico Score or even Identity IQ. It'll give you all 3 of your credit scores as well as all 3 credit reports. So anytime you're out there and you see like Credit See Me, Credit Karma, or even sometimes the credit bureaus have like the individual ones where you can sign up for their monitoring. There's like a free version, and then there's like one you have to upgrade to. It's always best to invest because it's going to give you the best scores. I personally like my Fico score because my Fico score, it gives you the different scoring models. So if I was to go and get a auto loan, it'll tell me the scoring models that most lenders use for auto loan. Like for example, Fico Score 8 or Fico Score 9, it'll tell me which one, or say if I'm actually out shopping, they'll tell me which one they use, and I could actually go and check and look at my score personally and see what my score is, because that's why your score varies a little bit, because as I stated before, not all lenders report to the same bureaus, so they may be off a little bit. Okay. So the next slide is asking for a higher credit limit. So if you've been pretty much doing some of the things that I've mentioned, or even if you haven't, but you will start, if you haven't been doing those things, you can go ahead and ask your lenders every 6 months after keeping good payment history, and you can go ahead and call them up and on the phone, or sometimes even they have the mobile apps nowadays. You can ask for a credit increase. And sometimes with those credit increases, you want to know if they have, they're going to give you a hard inquiry or not. So for example, Capital One, sometimes they may give you, they may increase your limit automatically with you not even having to ask. They may just increase you. But if you're going to call them up, you want to make sure that you ask if they're going to put a hard inquiry on your credit report. And then it's also great, as we discussed before, keeping your balances very low, because your credit looks good with the higher amount of your credit limit versus keeping it low. So as an example, if you have a total of 5 credit cards, and with those 5 credit cards, your limit is $50,000, for example, and your utilization is under 10%. Say if you're only using about 5% of that, that's going to look really good when you go to get that auto loan or to apply for a mortgage loan or whatever it is that you're out there applying for. It's going to look really good when you're out there requesting a higher limit or asking them to lend from you. Okay. So the next slide here, I'm actually going to share with you guys this one. It pretty much breaks down credit for you. So I can actually just read it from you off of there. You guys can actually see it as well. But this is something that I created, that I posted on my personal business Instagram page. And it's a credit score cheat sheet. So basically this right here, it breaks down how your credit is actually scored. So I'm not sure if you guys know or not, but your credit score actually starts at 300. And your credit score can actually go all the way up to 850. And then this is how you actually get the points. So the very most important thing, I put it right dab in the middle, is, as we already discussed in slide 1, paying your payments on time. If you know you're going to be late, call your creditors, communicate with them. Don't just not pay on time. Okay? So, and this accounts for, once again, 35% of your credit score. So, and this is how it's calculated right here. It's out of the total of 850, and it starts at 300. What you do is you do 550 times the 35%, and that gives you 192.5 points. That's how much is allotted for paying your payments on time. That's 192.5 points of your credit score, paying on time. So it's very essential that you make your payments on time. Okay, so the next one is paying down your credit debt, actually. So keeping your balances, once again, under 10%. So this accounts for 30% of your credit score, and then once again shows the calculation of how it's calculated. 165 points is just keeping your utilization low, okay? The next one is right here, we already pretty much kind of discussed again, but this is just a scoring model of how it's built, is building your age early. So that's your credit history. Apply for your first credit card when you turn 18 or get added as an authorized user. This accounts for 15% of your score. Once again, here is how it's calculated. 82.5 points is your age of history. And having a different variety of credit is worth 10% of your score and worth 55 points. It's best to have a great mix of credit. So having an auto loan, having mortgage loan on there, maybe if you go to rent some furniture and that's considered actually an installment loan on there, and you rent furniture, you make payments on it, you pay it off. That's a great mixture of credit. You have different types of loans. So that's 55 points on there. And then next is, don't let everyone run your credit. You want to be very selective of who you allow to run your credit. And just because you go to, say if you go to Target, and that's actually my favorite store, by the way, you're at Target and you're at the checkout line and they say, hey, Miss Jackson, do you want to sign up for our Target credit card today? You get an extra 40% off. Well, 40% off sounds very exciting at Target because typically you only get that 5%. And it seems like them 5% is like little pennies. So it'd be very exciting to get 40% off at Target. But if you know you already have a bunch of credit cards or you're in the process of buying a home, you can actually let that 40% go. Don't allow everyone to run your credit, okay? Too many inquiries can lower your score. Also, if you don't even have a credit card established, or you don't even have a credit card and you're allowing multiple people to run your credit, that's another reason why your credit score may be low. So be very picky with who you allow to run your credit, okay? So the next slide here is Q&A. So I've just gone over the 5 steps of what it takes to build great credit. Does anyone have any questions? It's okay to come off mute and ask these questions.
What's the name of that website that you use for to check all your FICO scores and the different scoring factors that each company, each creditor uses?
My Fico Score?
myficoscore.com or?
My Fico Score. It's an app, or yes, you can go to their website. So My Fico, which is myfico.com.
All right, thank you.
Okay. Any other questions?
I have a question. So about adding people to the cards, what if someone adds you, but then they end up not paying? How does that, what are the implications for that? For the person
So that'll actually, so that's why I said be very selective, and you want them to have a good track record of having great credit history. So if you're going to get on someone's card, make sure you know that that person has great history of making their payments on time, because you don't want that to affect you. So if you get on someone's card and they end up not paying it, essentially that's going to impact you. So you could choose to go ahead and pay it if you want it, and they're not going to pay it, so not affect you. You can go ahead and make that payment, so that way it'll bring your score back up. But yes, it will impact you. So be very picky of who you become an authorized user of. Make sure that you know that that person has great credit.
Yes, Constance, this is Wale. We had a few questions on the chat. I'm just going to read them out to you.
Okay, yeah, because I can't see those. Thank you.
No worries. Somebody asked, at what age can a young person become an authorized user? And also, is it possible to remove old reports from your credit?
Okay, so I'll start with the first question, which the first question is, at what age can you become an authorized user? So I believe like the youngest is about 15, 16. It just depends on the lender. For example, like with Discover, Capital One, any of the MasterCards out there, you just have to call them, because, you know, as you become a teenager, a lot of times, sometimes parents, maybe not in our community, but sometimes parents, add their children on there at a young age. That way, by the time they actually do age to the age where they're able to establish their own credit, they already have great credit history. So that's a good reason why a lot of times people do that. So it just depends by lender. Pretty much about 15, 16 though is when most lenders allow someone to become an authorized user on there. The next question was, correct me if I'm wrong, was it how to get negative items off your report? Was that the question?
Correct, Constance. Okay,
so yes, getting negative items off of your report, it is possible. I do credit repair also. Well, I do credit repair. So with that, it's basically just sending out a letter to the creditor and the credit bureaus to get the information off there, challenging the information that's reporting on your credit report. So the FCA has 30 days to be able to respond to you, to be able to respond to the letter and challenging that information off of there. So sometimes, for example, if they don't even respond to you within that appropriate amount of time, because by law they have to respond to you within 30 days, and if they don't respond to you, that's actually great in your favor and a way of getting it off of there. So it's just basically writing them a letter and challenging the information that they're reporting to get it off of there. Okay. Any additional questions?
Just one more. Somebody wanted you to talk about the difference between the new FICO score and the old FICO score.
Okay, so the differences between the FICO scores is there's different FICO scores actually out there right now that are being used, which is FICO Score 8 and also FICO Score 9. Those are like two major ones that most people use. And the difference is, like right now, for example, if you were to go and get an auto loan, with most auto loans, you can get like a great deal with like a 680 on your auto loan. If you have a 680 credit score, it's not the best credit score, but it's pretty good to work with. You can pretty much get 0 down and be able to negotiate some great deals with the 680. Obviously, the higher your credit score is, the better. Now, there is a new FICO score model coming out this summer. I believe it starts next month in July. It's FICO Score 10. And the thing is, some of the rates are going to be higher. It's going to be required for you to actually have a better credit score with the new FICO score model that's coming out. Now, also with the new FICO Score 10 that is coming out, not all lenders are going to rush and jump on it right away, because it actually costs money to change your processes and systems to be able to start using this new scoring model. So with that, you just want to always make sure, making sure you're doing the things that we discussed here today in the presentation, that you're making, number one, I'm gonna say it again, make your payments on time. It's very important to keep your payments on time, because with mortgage loans as well, they've already put it out there, they're starting to make you have a higher credit score. It's no longer acceptable to have a 580 because you can get a mortgage loan on a 580. It's no longer acceptable to have a 580 and to be able to get a mortgage loan. So you need to be able to boost your credit score up by making your payments on time. I'm going to repeat it once again, because that's the most important. The others are important as well, but that holds a lot of weight. So it's just doing the things here that we discussed today, and basically they're upping the bar. So with the lower your credit score is, it's not going to be in your favor anymore. You may not get as approved as for many things that you were with a lower credit score that you currently have now.
Hi, Constance. This is Tabitha. I have a question.
Hi, Tabitha.
So I know the annualcreditreport.com, they're giving out free weekly online reports until April 2021. Do you recommend I utilize that service as well?
I do. I totally recommend that. And I actually do. I've announced that on my personal business Instagram page. So yes, for those of you out there who don't know what is on your credit, that is a good tool to have, myannualcreditscore.com. You can go on there and they will tell you, actually, you can go on there once a week and it'll tell you what's on all 3 of your credit reports: TransUnion, Experian, as well as Equifax. It'll give you all 3 credit reports every week. If you go on there, so because things are constantly changing. The credit bureau might have reported your reporting dates on the 7th, and then next week on the 14th, it's going to be something different. So you can go on there. That is a really good tool to check your credit score weekly. Thank you for that, Tabitha. Any other questions?
Well,
no other questions at this time? Okay.
Hi, how are you doing?
Hello.
Thank you for the presentation. This is Fisaya. Can you speak a little bit to debt to income ratio as far as getting loans from the bank? What is frowned upon and what potential range we should stay within?
Can you repeat that once again?
As far as getting loans from the bank, when they look at the debt on your credit and the income that you're making, from that perspective, do you have any idea or experience with regards to what percentages for the debt to income ratio that you would advise that we stay within to be looked at favorably for loans?
So far as your debt to income ratio, I would say it's about 20%. So like no more than 20% being in debt to your income. So if you're only making about $30,000 a year, and I would say keep your debt about 20% to getting loans. But once again, it's changing because the different scoring models and lending methods that they're using, they're constantly changing with the different scoring models that are coming out. Like with the right now existing, it's 8 and 9. So you want to make sure, once again, you keep your debt very low. Don't spend more than what you can afford. It goes back to also budgeting your money. So if you want to go and get a loan for something, maybe you just want to use it as a personal loan, make sure that your personal debt isn't that high, so that way they know that they could trust you to pay them back with their money.
Thank you.
Hello?
Yes, what was that?
Oh, is zero utilization bad for credit?
Can you repeat that a little higher? Can someone repeat that for me, please?
Zero utilization, is that bad for credit? So if you pay your balance over the month before it's recorded, you have a chance of, I guess, having zero utilization. Is that bad for your credit?
You sound very muffled. I'm hearing bits and pieces, something about utilization and spending monthly, but I'm not 100% sure of what you said.
Yes, Ayo, you may need to fix your mic. We're having a hard time hearing you, Ayo.
All right.
Or if you maybe want to drop it in the chat, someone can translate that for me.
No worries. While he's doing that, I have a few questions from the group that people have asked. Somebody asked, what is the fastest way to raise my credit score? And also, should I close my credit cards that I don't use? I think you may have answered that already. And also, what are a few ways to avoid some credit card fees once I have a credit card?
Okay, so in regards to the closing, yes, we did already discuss that. I'll just go ahead and reiterate it once again. So yes, if you have some credit cards that you aren't using, you don't want to close them. There's really no reason to close them just because you aren't using them. You want that age of history. You want to let the banks know that for a long period of time, you've had this particular credit card and you can carry good credit on this credit card. Making those payments on time. Ways to instantly boost your credit. So for example, sometimes people don't have credit cards because they feel like, they honestly can't manage it. And that's very important. You've got to be responsible to be able to manage your credit card. So it's kind of like setting up the tone in the front of the presentation that we had, managing your debt, making budgets for yourself. So becoming disciplined. So if you don't have a credit card, because I do a lot of consultations with people sometimes, and some people don't even have credit cards. So having a credit card is actually very important. You need that. It's 30% of your score with the utilization of spending on that particular credit card. So if you don't have a credit card, or if you do have a credit card, another great way to actually boost your credit, getting some more points on your credit card, is first go ahead and look at how many inquiries you already have, because it's always best to have like 1 to 2 inquiries total. You don't want to allow everyone to run your credit. But if you go and apply for an additional credit card, which there's certain credit building cards out there, and if you want to have a consultation with me, I can discuss those particular cards more into depth. But there are certain cards out there that are actually designed to help you build your credit. So for example, if you already have a credit card and say, for example, that credit card is only a $500 limit, you're actually spending about more than half of it already, and you don't know what to do because you're actually already struggling just to pay off that particular card. So what you could do is you can go and get one of those credit building cards. They're automatically guaranteed approval. Once again, if you would like to know more of those particular cards, you can set up a consultation with me. But there's credit cards out there that are designed to help you build credit. You'll get approved for the particular credit card. You do have to put money down for it, and it'll give you a limit of like $5,000, which actually helps offset that debt that you already have. So your current limit is $500. Adding that $5,000 will actually lower your utilization. So it's just actually, knowing what it takes to build your credit. Another great way, we already discussed, becoming an authorized user. If your utilization is already already high, and you know someone with great credit and you trust them that they can carry you on, so that way once you get to where you can apply for your own personal trade lines of credit, then becoming an authorized user is another great way to go, because it'll actually help you out as well with boosting your credit score up. And it'll open up the opportunity for you to go ahead and apply for your own credit cards and get things as primary trade lines in your own name versus just carrying off of someone else's credit. It'll then open up doors for you and have opportunities for yourself to be able to get your own. Any other questions?
If anybody on the call wants to ask a question, please feel free to unmute yourself and ask Constance your question. So if you guys have any question, please feel free to unmute yourself to ask the question.
I have a question. It's related also to like closing an account.
Okay.
So like, I'm pretty young, and as a freshman in college, I took out a really small loan, and I've wanted to pay that off like since I took it out. But because I only have one credit card, I'm scared that if I close that loan account, like it'll decrease my credit score, because the only credit that I'll have is is a credit card that I have I've only had for about like 6 months or so. So is it best to just leave that loan account open and just like, I guess, and just let it accrue interest and pay it off little by little? Or is it best to just pay the whole thing off and just deal with trying to maybe get a new credit card or so?
So that's a very good question. So let me repeat it back just to make sure I understood. So right now you went out and you got a small loan. And then you also, since you're very young, the only other credit you have is a credit card. So you're afraid that once you pay off that small loan that you went out and opened, that your credit score will go down because you've now closed that particular account. Is that correct?
Yeah, and I'll only have like about a year worth of, like 6 months worth of credit history.
How long have you had this card open or this other loan open for?
Since I was a freshman, so I was senior now, so 4 years.
So 4 years. Okay. So you're correct in a sense. So once you do pay off that particular loan, and say, for example, I don't know your payment history or anything like that, but if you've been making good payment history on that particular card, and once it closes down, that particular account will still show on your credit score. Now, the unfortunate part is, yes, your score will drop because that's actually considered an installment loan, because it's something that you pay off for. A revolving loan would be like one of your credit card. It's constantly revolving. You can spend it, pay it off, spend it, pay it off. So your score will drop. So I recommend, building different types of credit, which is how we talked about different varieties of credit. So yes, you can go ahead and establish an additional card, but the thing is your history will still be low because you just opened the card. So maybe if you have like a family member that you can go and talk to, maybe they can add you as an authorized user on their credit card or one of their accounts. So that way it opens up that history that's getting ready to close. Because once you pay it off, it'll show that you've established that account for only 4 years. But say, I don't know your payment history, but if you've been making excellent payment history on there, it still shows as a positive. So it's not all the way totally bad, but over time, if you still continue to have great credit habits, then your score will then jump back up.
Thank you.
Okay, you're welcome.
There's some questions on the chat. One says, is zero utilization bad for credit? That's one of them.
So zero utilization is not bad for credit. You don't always want to keep it at zero. So if you've had a particular card for a certain period of time, let's just say for a year time span, and you don't touch it, that particular lender can choose to close your card because you're not touching it. So every now and again, I recommend, say, if it's like a Visa or MasterCard, it's not like a merchant store. Even if it is a merchant store, just go and purchase something really quick and pay it off, just to keep it open. So 0% utilization is not bad, but you do want to show that you're using it. So I say keep it between 1 to 10% is good. But yes, it's not bad, but you don't want to always keep it at zero. You want to be able to utilize your card.
All right. They have a follow-up question. Say, if you pay your card off every month, there's a probability of always having a zero utilization. Is that a good or bad thing? That's just from the same person.
No, it's not a bad thing paying it off because you're still using it. The card is still active. Now, if it's constantly at zero and you're not making any purchases, then that lender does have the opportunity to close the card if you're not using it for whatever their rules are for a certain period of time. So if you're using it monthly, paying it off monthly, that's good. You're great.
All right, there's another one from Gael. What is the best credit card company to have? And when you talk about 3 inquiries, is that per year?
So it just depends on exactly what you're looking for as far as your personal preferences. Because different credit card companies have different perks. So some of them have cash rewards. So if that's something that you enjoy, cash rewards. Some of them have traveling perks or hotel perks. So just pretty much, just depends on what you want out of that credit card lender. So when you're actually shopping for a credit card, you actually want to look at what they have to offer you as well. You want to look at their cashback rewards. You want to look at if they offer you traveling perks or points that you can redeem for whatever it is. So you want to look at those different things that they offer you as well. So since we're talking about credit building and you want to build credit, so I would actually recommend Capital One. Going to Capital One, they're pretty good with, first time people who don't have credit cards. That's someone who you can go to get a credit card.
All right.
All right. Thank you so much, Nina, for asking those questions. We had a few questions that came in earlier, Constance. I just don't want to let them go by. Somebody asked, how many credit cards is advisable to have? That's the first question. The second question is, what is the difference between experience/Equifax score and the credit score from the banks?
Okay. So can you repeat the first one more time? How many different credit cards to have? I'm sorry.
How many credit cards is advisable to have?
It just depends on how long, honestly, you've had your credit. So, if you're just establishing credit, I would say about 2 to 3 credit cards is okay to have. But you're going to find, honestly, the longer someone has had credit, the more credit cards that they have because they've built their credit up. So it honestly just depends on your age of history, how long you've established credit for. So for someone who's just building credit, about anywhere between 1 to 3 credit cards is good. You're going to find people who've had longer history of credit to have more credit cards. So that's fine there. The next question, what's the difference between the different scores? So the difference,
Equifax and Experian, and the difference, the one that the banks give you.
Okay, so it just depends on, like, for example, with like the ones that the banks give you versus Equifax and Experian. Mm-hmm. Now, once again, there's different scoring modules. There's a Vantage score, and then you have your Fico score. So it just depends on what the lender is using. So if you're going to purchase a vehicle, for example, some vehicle lenders may use your Vantage score, which is the score that Credit Karma shows you, and sometimes what the bank show you. You just have to actually look on the report that they show you, and it will tell you on there which scoring module that they're sharing with you. It might say Vantage 3.0, or it may say Fico Score 8. You have to actually look on there when it gives you your score. You have to look on there and see which one they're giving you. Now, difference is they're just different lending methods that they're looking at. They're looking for certain different things on there. And so the reason why the scores may be different as well is, how I mentioned previously in the presentation, that every lender doesn't report to the same credit bureau. So for example, if you have a car loan and then you also have your mortgage, and then you also have your credit card, then you also went to the furniture store. Now, the furniture store may not report to TransUnion, but everything else on there reports to TransUnion. And that furniture store maybe only reports to Experian. So it just depends on which one that the lender reports to. That's why sometimes your score is different. That's why when you review your report, you have to look at exactly everything that's reporting on there, because everyone doesn't report to the same bureau. Some of them all across the board report to all 3, like Capital One and Discover. They report to all 3 credit bureaus, which is Experian, TransUnion, and Equifax. They do report to all 3, but all of them may not report to all 3. So that way, sometimes too, when you're looking at your utilization, on one bureau, it may say it's 30%, but on the next bureau, it may say it's 50%. It's because all of the information isn't 100%, because they don't report to all 3 credit bureaus. So you have to look at those key informations when you're looking at your reports. Make sure you know who they're reporting to, and then how much you're spending. So that's why it's great overall. When I say overall, all of your credit cards combined together of spending less than 10% of your total limit. So keep it very low, so that way the differences between the different bureaus, they're not going to be offset by that much.
Appreciate it. Just a couple more as we stress for time right now. Somebody asked, is it good to consolidate all your debt? Do you think it's a good idea, and when is the best time to do so? And also, you mentioned about credit repair. Is that like, somebody mentioned, is that like debt being written off? And the last question, how does student loans affect your credit score?
Okay, so if I can tackle on the first one,
yeah.
Can you actually give them to me a little slower so I make sure I can answer them?
No,
can you repeat the first one for me, please?
Is that consolidation a good idea? If so, when is the best time to do so?
Me personally, I personally wouldn't recommend debt consolidation, because all they do is take all of your debt into one and you still have an interest rate. And what debt consolidation is, that particular company will pay it off, and then you're paying that debt consolidation company all of the amounts that you owe with a certain percentage rate. So with using the tools here that I've kind of threw out there today, you can actually work around debt consolidation by just offsetting some of your debt by getting a different credit card that you will automatically can get approved for, which if you want to have a consultation with me, you can, and we can discuss these options for you. But I personally wouldn't recommend debt consolidation, because you're still going to be paying interest on the debt that you owe, but they're going to try to consolidate it into a lower ratio. So I personally don't recommend it. What was the next question?
Yeah, I think during your presentation, you mentioned that you do credit repair.
Yes.
So I want to know, is that like a debt being written off?
So with the credit repair, it's me writing letters for you on behalf of you to the credit bureaus as well as the debt collectors, working out negotiations for the existing debt that you have on there, challenging the debt that they have on there. Because sometimes if you owe a debt, those debt collectors, they're not licensed to collect debt from you, for one. And then sometimes they may not be even licensed in your state to collect from you. So it's me sending out letters challenging them and making sure we validate the debt that they say that you owe on there for you. So that's pretty much what I do with credit repair. And if anyone wants or has any additional questions in regards to their personal situation, at the end of this presentation, there's some information on how to contact me, and then we can go ahead and have a consultation in regards to your personal situation and how I could assist you.
That was great. Thank you so much, Constance. The last question I have is, how do student loans affect your credit score? And also, somebody wants to know, how much do you charge for a consultation?
Okay, so how do student loans affect your credit score? So it just depends. Are these student loans deferred? And if they are deferred, that means that you're not currently paying them right now, which is actually racking up history. Because if you've been in, say, for example, you're a senior in school, that's just about, for example, if it's your undergrad, you hit your 4-year mark. So these loans have been deferred for 4 years, and you have 4 years of history on there. Now, so you're not making those payments. Now, if they're not deferred, then are you making your payments on time? So it's just like any other account. It's how you pay it. So if you're making your student loan payments on time, then these are going to reflect as a positive on there. But if you're not making your your student loan payments on time, then they will reflect as a negative on your account. So they don't necessarily hurt you. They're not to hurt you, though. You may find that student loans, in most people's cases, people owe, hundreds of thousands of dollars in student loan debt. It doesn't hurt you unless you're not making your payments on time.
And this last question, how much do you charge for a consultation? I'm not sure. Somebody just asked that question.
Okay, so anyone that's watching this presentation today, and I know some people have already left, but for this particular setting right now, anyone who wants to have a consultation, please feel free to email me, and I will show you my contact information on the next slide. And anyone in this setting that did watch this presentation today, I will be offering free consultations. Right now, I'm not honestly even charging for my consultations. But yes, so you can get a free consultation with me.
Awesome. So there's going to be time for one more question from anyone on the call. So if you have a question, please.
I have one.
Go ahead.
How often should a person request for their credit report?
Okay. In a year? So right now, as we mentioned too as well, you can get your credit report free. So when you personally pull your credit, it does not affect your credit report. It does not affect you at all when you're pulling it personally. Now, if you're shopping for an auto loan, a home mortgage, if you're letting different department stores run your credit, then that's not good. So honestly, in a year time span, twice. The scoring module in there is twice. You don't want to allow people to run your credit more than twice.
Thank you.
You're welcome.
Thank you so much, everyone. And Constance, please, I know you mentioned you wanted to share your contact information. I just want to thank you again once more, and thank you everybody for your contribution and your questions. It was a great session. Like I said earlier, please send your email on the chat so we can send you a copy of this great presentation. And Constance, please let the people know how to get in contact with you.
Yes, so I did already go, oh, it's loading, it's going a little slow. But these right here are ways that you guys can go ahead and contact me. This is what you should look like when you type in this website here. This is what you should see if you were on like a laptop. This is the version that you would see. This is the homepage of my website. This is my email address right here. So if you do want to email me and you have any questions or want to set up the consultation, this is how you can email me. And then this is just a mobile view here of my Instagram page, the Credit Diva Expert on Instagram. Also, that's the name of the website, although my company name is Another Chance Credit. The Credit Diva Expert all across the board, pretty much. That's how you can find me on Gmail, through email. That's the name of the website, as well as on Instagram, the Credit Diva Expert. Okay. And that's all I have for you guys today.
What was your email again?
The Credit Diva Expert at gmail.com.
Awesome. So Dwayne, I'm not sure if you want to close us out.
All right, Constance, thank you so much.
You're welcome.
It was a great presentation, and thanks for answering all the questions. There was a lot of questions, so we really appreciate it. For our last segment, we would like, we do something called Common Sense Finance Tip. So if you have a common sense finance, you can give us for everyone on the line.
Yes, so a great financial common sense mine would be is, what is a good credit score?
I would say 800 plus.
So yes, that is great. But to be quite frankly honest, once you hit that 720 mark, you also you will have just as much as great purchase power as having an 800 credit score as you would with the 720. So I would say once you hit the 720 mark on your credit, that's actually a really good score to have. Now, the higher you go, also it is the better, but you start getting those same perks as you have an 800 credit score.
All right, thank you so much. That was great. You dropped a lot of knowledge and gems, so we really appreciate it. Also, thanks for everyone for joining us tonight. Thanks for the time. We really appreciate that to be with us tonight. I hope everybody learned as much as I did. Once again, this is African Business Club. Our goal is to normalize financial literacy and promote collaboration and sharing of ideas in our community. So don't let the conversation doesn't have to end here. So please join us on Instagram and Facebook at African Business Club 2020. And also we are on YouTube. On YouTube is African Business Club. We post these videos. We have a lot of content on YouTube. So please subscribe to it. This recording will be uploaded during the week. Share with your friends, share with family. And just a reminder, this group is growing in numbers, so we want to stick to our model, which is collaboration over competition. So if anybody's interested in participating in anything that we do, we have every other Tuesday. We also have the roundtable discussion. So please join us on that one also. And if you're just interested in joining to present or to even maybe moderate any of the presentation or to just help share flyers. Let us know. We want to be a group effort. So please reach out to me, Funshaw, Wale, Pamela, Deji, and Dami. We also have a WhatsApp group that we share enough knowledge on that WhatsApp group. So anybody on this call that's interested in joining that WhatsApp group, please reach out to any of us. We will reach out to Funshaw actually, or any of us, then we can let Funshaw know. We can add it to the WhatsApp group. There's a lot of talented people on that group, a lot of knowledge being shared every day. So anybody's interested, please let us know. Lastly, I would like to remind everybody we are all kings and queens. So please, let's treat each other as such. Let's respect one another. More than ever, this is a time for us to work together, love one another, respect one another. So please, let's remember that. With that said, thank you, everyone. Peace and love.
Thank you.
Thanks, Constance.
Thank you.
Thanks, Tom.